Good afternoon, ladies and gentlemen, and welcome to the INTERCEDE Group PLC full year results investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab that's just situated on the right-hand corner of your screen. Please just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all of the questions submitted today and publish responses where it is appropriate to do so. These will be available via your Investor Meet Company dashboard, and we will notify you by email when these are ready for your review. Before we begin, I would like to submit the following poll, and if you could give that your kind attention, I'm sure the company would be most grateful. And I'd now like to hand you over to CEO Klaas van der Leest. Good afternoon, sir.
Good afternoon, Jake, and indeed good afternoon, everyone. My name is Klaas van der Leest. I'm the CEO for INTERCEDE. I'd like to welcome both existing investors as well as potential new private investors to the session, which will cover our results presentation for the period leading up to the end of March 2022. During this session, I'm joined by our new CFO, Nitil Patel, as well as our Chief Product Officer, Alan Story. As you may have heard in the recent RNS updates, our existing CFO, Andy Walker, announced his retirement. So I'm in a lucky position where I have two CFOs at the moment whilst we're doing a full handover from Andy onto Nitil. Whilst this presentation is clearly us presenting to you, we do look forward to your questions, but also to your feedback after the session. So without further ado, let us start with the presentation, and we'll provide you an update on the year that's been, but more importantly, where we're heading going forward. So in short, we'll give you a quick update on progress report and results highlights. I then hand over to Nitil, who will talk about financial review. I then do a very short introduction to the strategy before Alan takes over on product and market overview, which subsequently leads quite nicely into our approach and strategy for M&A. And then we'll wrap up with summary and outlook. We will not go into the appendices unless there are specific questions coming out during the Q&A. Let's start with slide number 1, progress report. Clearly, I joined 4 years ago as part of a turnaround play. That's been completed. We're profitable. We've strengthened the management team. We've significantly invested into the product. We built our go-to-market model on channel and a reseller model. And we're now very much geared up for phase 2, where the objective is to achieve increased revenue growth. Revenue growth in terms of organic, we've extended the product portfolio to take on a much bigger slice of the market that we have traditionally moved into, and Alan will talk about that. And the second track of our growth plan is M&A. We appointed a head of corporate development in late summer last year. In the process, we've identified over 200 targets. We've profiled those. We had active dialogue with 9 during the period under consideration, but we didn't conclude on anything for different reasons. You know, we fully appreciate this is our first foray as a company into M&A. Whilst Nitil and I have extensive experience from an M&A perspective, we do want to make sure that whatever we do on this track is right and first time right. So we then move on. We didn't get to the revenue where we wanted to be. We had a miss on revenue, 4% on constant currency, and there are 2-3 main underlying reasons for that. There's nothing materially wrong with the business. The product is fine. The organization's fine. Market is picking up again. But those who've been supporting us for a while and following us for a while know that, you know, we do pursue large opportunities, particularly in US federal space, and we've seen some delays on some of the larger opportunities. We haven't seen these opportunities moving away. We haven't lost any opportunities. It's simply that these opportunities are being delayed in time. These are large opportunities, and you know, we can't control those opportunities with regards to timelines. We have to follow the process that the agencies are setting, and we actually have seen in recent months a real uptick in activity. Alan is one of the executive team members who frequently gets involved, and earlier this week was involved in late presentations towards an opportunity that we're pursuing. Again, tonight we're again presenting for other opportunities, so you know, we are actively involved. So that's one main contributor. The second contributor, we've been very loud and clear on during the COVID period that continental Europe for us has been very, very quiet. Simply, the majority of the continental European countries were earlier in lockdown than we were here in the UK, and that basically stymied any progress that we could make in the region. Good news is, in the last 3 to 6 months, continental European, but also Asian activities have picked up again. We're seeing existing opportunities that we already had in the pipeline again maturing. We're seeing net new opportunities appearing. More importantly, we see order flow coming into the business. And then finally, contributor, again, those who are following us for a while know on the larger opportunities, we tend to see 1 or 2 patterns when clients, prospects acquiring licenses. They either acquire the entire license volume upfront and therefore take advantage of the lowest possible cost, or they buy in smaller quantities and then they ramp up the quantities as they move into production. Both large opportunities that we announced in Q4 have chosen to buy smaller quantities. Good news is they're both competitive displays. So what does that mean? It proves that our product is definitely market leading because we're taking competitors out of the market. And it also means that these clients will migrate from competitive platform onto MyID over the period. And we definitely expect to see progress during this fiscal year. What else can I add to that? Our recurring support and revenue stream, our maintenance stream, our annual recurring revenue increased by 10% to just north of 6.7 million. And we expect that to grow also in the current fiscal year. Our business is very, very sticky. We see very little attrition. 98% renewal rate on support and maintenance is very, very strong. It also means we're not losing large opportunities. Clients who come on platform tend to be very, very sticky. They're with us for 5, 10, 15 years periods of time. We have one client here in the UK who's renewed for the 21st year, and we clearly like that type of business. Other interesting point to note is record number of new client wins. Whilst we didn't get a large one, which discussed above, we have seen a record number of new clients coming on platform using MyID. Across a number of different regions with a good spread. We also won our first client in Latin America through a new partner, so that's encouraging. We already have seen other opportunities through that same partner appearing, and that also leads quite nicely into the next point that we continue to establish new partnerships. Again, those who have listened to us before, we launched our indirect go-to-market model 4 years ago. Our Connect Partner program has got 2 pillars. One pillar is the technology partnership. So it's those technologies and applications we need to integrate with or to in order to drive an end-to-end solution. It's very much driven from Alan's side as Chief Product Officer. And then the other side of the program is the resellers. So those companies who actively take MyID as a software solution to market, integrated with third parties, and then offer an end-to-end solution out to clients and prospects. Andy Darley, who is affiliated with FinCap, clearly writes the notes that are coming out. And one of his notes his last notes is very, very clear that we also see now second and third opportunities appearing through existing resellers. So it's all nice and well to sign up a reseller and try and consume a first deal, but it's far more interesting for us to consume a second and a third deal. And that's what's now coming through. I already talked about the 2 deals that came through later on in Q4. Both of those are initial entries into 2 net new federal agencies for us. What does that mean? It means that we have immediate upsell opportunity as they migrate away from competitive platform onto MyID. We fully expect incremental license orders, but there's also a second part to that, which is very much the land and expand. And typically, those agencies don't just have a single instance of software like MyID, but they have multiple instances of that software. So clearly, the strategy that we will be following is to expand into that client base and try and secure more net new business going forward. Final point on the slide is cash. Cash still remains strong. Nitil will also clarify that as of today, cash is actually significantly higher than the 7.8 we've reported as part of the period under review. So where do we position as a software play? We're part of the wider identity and access management market, and within that market, we're very much focused on the authentication segment. And when we talk about authentication, we refer to our pyramid as you see on the screen. Bottom of the pyramid, passwords not secure. Top of the pyramid, PKI. That's the area where we've played. Now, clearly, a lot of companies are still using passwords. And passwords are frequently the reason why one sees data breaches. Colonial Pipeline is a great example in the last 6 to 8 months, where the CEO for Colonial Pipeline was hauled in front of the Senate in the US and was asked to explain what happened. And the response was, well, yeah, it was a password, but it was a complicated password. Well, the challenge there is it was still a password. Passwords are easily breached. So we play on that top end on the PKI side. We build up our credibility there over the last 20 years. We've probably got one of the largest PKI knowledge and experience pools globally. And we build up a phenomenal client base. When you look at the client base, we have, you think, hang on, this is a small company in Lutterworth, but with a very impressive client base who use anything from thousands to tens of thousands to hundreds of thousands to millions of licenses. So what does that mean? We have credibility in that space. However, what's also become apparent in the last couple of years is that PKI is a niche market, and this pyramid is a really good reflection of relative market size. So what have we done over the last 2 years? We said, hey, we want to use our credibility in the space, our knowledge in the space, our technical prowess in that space to try and come down the pyramid and actually eat into that midsection of the pyramid. So March, April last year, we launched our latest release that included PKI as well as FIDO. Alan will talk a little bit later about the impact of FIDO and why that now has become very important for us. And then later on, as I talk about M&A, we'll highlight why we are interested in coming down that pyramid further and take a larger position. So overall, we're in a really interesting market. Clearly, in the current geopolitical climate, cybersecurity is pretty high up on the agenda. We see a good level of interest. We see really good pipeline. So on that note, I'll pass on to Nitil, who will do his finance review.
Thank you, Klaas. Okay. So just reiterating what Klaas has said, we're moving up from phase 1 into phase 2. Phase 1 was all about building good, strong foundations, and we'll talk about how that's been reflected in the income statement and the financial position. But phase 2 is all about growth, revenue growth, revenue growth, and how do we go about doing that? And the focus is obviously organic and inorganic. And organic is the continuing development of our product, making sure it's best in class, and we truly believe it is best in class. And then enhancing our sales and marketing methodologies, and then going to market with our movement down the pyramid into FIDO, which again, Alan will describe further in detail in the deck. So coming back to the income statement for 31st March 2022, as Klaas said, disappointing on the revenue, but what it does show is that, one, we have a very simple, clean income statement. We don't have adjusted EBITDA, adjusted EBIT, or exceptionals. We take the expense on our development into the income statement. We reflect everything accurately onto the statement, and we don't do, as I said, any exceptionals. The one thing to note is that we have a high operating OPEX, and that's mainly reflecting the fact that most of our costs are people costs. And an expectation of that is, how does inflation is impacting us going forward? It is impacting us, and it would be remiss of us not to acknowledge that. But what we've done is we've addressed it in 2 ways as best we can within the limitations of cash flows and profitability. And that is that we've given an element of pay rises to our staff this year for going into FY23 of circa 3 to 4%. And then we've given a discretionary bonus to address the other elements of inflation incurrence in United Kingdom and United States of about 3 to 4%. So we can't address all of the inflation that people are suffering, but we've addressed as best we can. And that's reflected in the churn as well. The churn is low in this company, and that's a good sign. We engage with our employees quite heavily. When I joined on the 19th of April, 2 weeks later, we did a very impressive 3-day company kickoff. where we had all our American friends flown over. So we had 3 days of good session and good attendance, especially 2 years after COVID. So what does that mean? That means that effectively the company's controlling costs as best it can. It's passing elements of inflationary pressure that it's incurring onto our clients. Again, we'll explain later in the deck of how we're doing that. And the other thing I'd like to note is that taxation, we've got a credit in here, and that reflects the favorable R&D tax credit scheme in United Kingdom. All our developers are in United Kingdom. Therefore, we can, if we're innovating, which is what we're doing, on our product, then we can claim tax credits, either add additionally into our losses going forward or as a cash repayment, and we've elected to do a cash repayment. Moving on, so what we wanted to show you on this revenue analysis, as we've mentioned, we do have a dip in this year, but a lot of our revenues come out of the United States or the Americas, and that we believe will continue. But the other thing that we want to focus on is recurring revenues and repeatable revenues. We call support and maintenance recurring revenues, and professional services is repeatable, and that's growing. And the reason we're focusing on that, and we will also focus on license income, is that it gives us the stability to say that recurring repeatable revenue now represents a certain percentage of our revenues for 60% this year, and looking to increase that. So it covers a huge element of our operating OPEX, and we're looking to cover 95% of that going into FY22, FY23 and FY24. And that's quite an important metric for us because it gives us that stability to then focus heavily on license growth, whether it be perpetual, and if where we can, annual recurring long-term contracts or SaaS models, because that is highly accretive to us. And as it feeds into the income statement, it moves straight down to the bottom line. So again, we wanted to show you where our revenue comes from on support and maintenance and why we believe it's so sticky. As Klaus has said, it's 98% repeatable and recurring, and therefore this churn is very low. And the reason why is that if you look at it from a sector point, US federal, aerospace and defense, UK government, the European government, and national ID schemes make a large chunk of our support and maintenance. And that continues to be sticky. And we can pass on elements of inflation increases between 3-4% to our clients who won't bat an eyelid against that. And that helps us mitigate the inflationary pressures we're facing on payroll costs. This is important for us because in this methodology and application, we're using the ability to use the stickiness of our revenues to help us increase our revenue streams in this area. And then the reflection on the financial position. Klaus has done a really good job with the team in the last 4 years of cleaning up the balance sheet, removing the debt, and the prudence that Andy has been operating for the last 21 years reflects in this balance sheet. You know, we don't capitalize our R&D, therefore you don't have a huge intangible. Our non-current assets are mainly to do with IFRS 16, which is leasing, and if that's a low number, that shows you that we've got low lease commitments going forward, and we will look to reduce that further. Our trade and other receivables is 4.6 million as at 31st March. As at 31st of May, we received $3.4 million from one of our bigger clients across the pond, and therefore we've got in excess of £10 million in cash. And as Klaus said, we removed our debt last year. We don't have any debt on the balance sheet, and we have a very strong deferred income going into FY23. So what does this all mean? It helps us for our third prong strategy, which is inorganic growth. We have a very good cash balance. And it means that we don't have we have a strong unleveraged balance sheet. So we understand that our current share price is low. So our strategy at the moment is to look at the right acquisition, and Klaus will come to that. We'll use our cash flows, but we will be prudent about how we use our cash and how we make sure that we've got sufficient working capital to maintain our trading capability for the next 6 to 7 months. And then we will look at a debt facility. We have a draft term sheet with Clyde's Bank for 6 million revolver, and we will enact that as and when we need to going into the acquisition mode. So what we want to say is that, you know, as Klaus has mentioned, it's phase 2. It's all about growth. It's how we execute on that growth, both internally through product innovation, through sales and enhanced sales and marketing methodologies, and also on an M&A strategy. And I'll pass you over to Klaus again.
Sorry, I was a bit too quick. So in this section, I'll do a quick update on strategy before I hand over to Alan to talk about product, market, and how we're positioning and responding to market movements that we think are critical for us going forward. So phase one for us has been very much about the turnaround, the repositioning, the restructuring, which we've completed. EMT, referring to the executive management team, Nittel coming on board is again a key member, and he's bringing valuable M&A experience. At the same time, we've also developed over the last 2 years the OMT. OMT is the operational management team, so it's the layer sitting below us. Why is that important? Because I know from experience, when you start doing an M&A, it can become very disruptive for your day-to-day business, particularly in smaller companies like we are. So we've developed the OMT team. They're really running pretty much independently. They have clear authority levels. They operate within the bands that they can operate in. They appoint their own chair, and as and when they need decisions, they float up to EMT. They ask for approval. We either approve or reject, or we enter into discussion, and then they move on. But from a day-to-day perspective, OMT is very much capable of running the day-to-day business. This has been particularly useful over the last 6-7 months, where we've had a number of M&A dialogues where we may be out for days on end, and our business is just carrying on. So that's really good. Talked about the balance sheet clean. We removed 400k of interest for the loan notes. We're increasing that addressable market, which Alan will talk about, and we continue to invest in our go-to-market model by using the technology partners as well as the channels across US, Asia, EMEA, and now also Latin America. So phase two, as Nittel has already highlighted, and we said in the introduction, it's all about growth now. It's about business expansions, 2 legs, the organic side, the inorganic side. And finally, what we have proven over the last couple of years, we've been very focused on the execution side. When I joined this business, we were pretty close to running out of cash. We've managed through a difficult period and then been re-establishing the business. I do believe that we've got the strong product at the moment. It's very well recognized in the market, not just by customers, but also by the channel community we're dealing with. And we're in a really good space. So let me pass on to Alan, who will take it a bit further with regards to what do we do as a product and how we position. Alan?
Okay, thanks, Klaus. So reminder of what MyID does today. So people buy our product to protect themselves against data breach. They do that by moving away from passwords at the bottom of that security pyramid, all the way up to the top with the highest assurance credentials. So today that's PKI and that's FIDO. If you're a small organization, you can probably deploy those credentials with some manual processes and a spreadsheet. If you're a larger organization, or you need to prove that you're complying with a particular security policy, you can't do that. You need a product to help you do that. That consists of registering the people. So that might be just taking data from an existing system. For the very high assurance schemes, it could be capturing fingerprints, facial biometrics, proof of ID document, etc. It's then issuing and managing the life cycle of those credentials. So there's lots of key management, there's lots of integration with systems, there's working with a range of smart cards, USB tokens, mobile devices, etc. And depending on the actual credential you're using, if it's a FIDO credential, you also need to be involved at the point of use as an authentication server. Is this credential valid while you use it? And that's really what MyID does. It helps you deploy those high assurance credentials and use them in organizations that need to do that at scale, tens, hundreds of thousands of users, and who need to comply with specific policies and prove they're compliant with those policies. Looking at how we take the product to market. So we have a platform, MyID, which we wrap up into 3 different product variants focused on different markets. So the darkest one on there, MyID PIV, that's very much focused on US federal government and associated industries, i.e. people who do business with US government, so aerospace and defense contractors, for example. big driver in INTERCEDE's revenues was back in 2006 when FIPS 201 came out. So this was a US regulation published by NIST that says every federal government employee needs to have an identity. It needs to be high assurance, it needs to be PKI on a smart card, and it needs to be issued to a certain business process. That regulation, FIPS 201, also has some sub-regulations which cover management of information outside of government systems. So that's SP 800-171. That's all about data that's government data but exists in contractor systems. So people like Lockheed Martin, Boeing, Booz Allen Hamilton, people who do business with government, and that really covers that 72% of our customer base. So that has very much been driven by the regulation states you must have high assurance credentials and you must management. So that is what I'd call a specific regulation. It calls out the technology you must use to provide that strong authentication. So that MyID PIV product, and PIV stands for Personal Identity Verification. It's just a subtitle of the FIPS 201 standard to make it more understandable. So that particular regulation applies to those customers. That's all about compliance. Comply with the standards. When I get audited, prove I'm complying with those standards. So that's the sell there. The second product variant is MyID Enterprise. That covers what I call more generic legislation. So things such as HIPAA in healthcare, critical national infrastructure, GDPR, I'm sure we're all familiar with, protection of PII, identifiable information. Those regulations talk about the fact that you must look at your risks, you must mitigate against those risks, and you must follow best practice, but they don't call out a specific technology. So those customers won't be compliant if they're choosing passwords, because that's clearly not best practice, but they could choose one-time password devices, and they could choose FIDO, they could choose PKI. So that product is much more open, much more flexible, very generic. You can configure it and customize it in many ways to meet customers' needs. It's not as prescriptive as the PIV product, which has baked in compliance policies within it. So that's our open platform that we sell to a number of customers. The MyID Professional product is aimed at smaller customers, so around the 500 to 2,000 volume. Those smaller customers typically don't have large IT departments, and they don't have the time to look at what's the best way of integrating a solution. They also tend to have simpler environments, fewer systems to integrate. So a product like MyID Enterprise, although it's highly flexible, can be challenging to those organizations because they've got lots of decisions to make about how to use it and how to configure it. MyID Professional takes that problem away by having a simplified, cut down, one way of working out the box. This is the way you issue credentials. This is the way you update them. If that meets your needs, then that's a very simple and quick product to deploy. You can literally within a day be up and issuing credentials. If you want the configurability and the flexibility and to drive it via APIs, absolutely we can do that, but that's the enterprise product. We also sell that professional solution on a subscription basis because that tends to meet that market's needs better. So that's how we take MyID to market today. A little bit more information on the features and functions provided by MyID, and then I'll take on the next slide into where we're taking the product for the futures. So the heart of the system is the piece in the middle. That's the issuance and management of those credentials. So that could be a smart card, it could be a USB token, something like a YubiKey, it could be on a mobile phone, it could be a virtual smart card, it could be to a mobile device, something like Microsoft Intune managed or VMware AirWatch managed. So at the top of the slide, we have all the systems we integrate with. So multiple PKI, certificate authority providers, people like PrimeKey, people like Microsoft, Entrust, DigiCert, for example. The MDM providers, people like Microsoft and VMware AirWatch, physical access systems. So there's a lot of integration MyID provides into joining all those systems together, which makes it a real barrier to entry for new people trying to get into this space. The bottom of the slide, we have the people using the system. So we have operators, these issue credentials to people, they provide help desk facilities if they'll lose them or forget them. And there's a huge amount of self-service in the system. So how can I manage my own credentials, collect updates to them, report them stolen, collect them, either at a kiosk interface, my own desktop, or a mobile. So that's been the heart of MyID for a long time, managing, deploying those credentials. Over on the left-hand side, for some of the higher assurance government programs we work on, we can't just issue a credential to somebody who claims they are somebody. We need to prove that. So for those environments, we can enroll fingerprints, facial ID, proof of identification, for example, driving licenses, passports, etc., information into the system. We can then match that against background checking systems. So one-to-many fingerprint checks. Has this person enrolled fraudulently as somebody else previously? And background checking systems such as the FBI, which do, does this person have a footprint on society? You claim to have this address. Does somebody with that name live at that address? Are you on a no-fly list? Are you on a terrorist watch list? So that's for the very high assurance programs. We can provide those capabilities. Over on the right, this is where we're starting to be involved as an authentication server. So if we issue a PKI credential to a USB token, you can just log onto Windows with that. It understands it out the box. If we're moving towards more modern authentication mechanisms such as FIDO, there's an extra component there, which is an authentication server. So its job is to decide, is this authentication valid at the point of use? And MyID provides that capability. So if somebody's logging onto a cloud resource, such as Office 365, for example, then that can talk to MyID to say, is this authentication valid? We can validate that with a person's FIDO token and hand the result back to that system. That starts to change the nature of where MyID can play. So some of the systems that do that piece today, the likes of Ping, ForgeRock, Okta, for example, tend to do that with lower or medium assurance credentials, but don't tend to do that with the higher assurance credentials, such as PKI or FIDO bound to a person's identity. So we can provide that, we can add that value to those systems. Okay. So moving on to drivers for change. I'm not quite sure how much you can see of my wall behind me, but if you can see any of it, those are cycling pictures from the Tour de France, which I love watching. Some of my friends think cycling is very boring because nothing happens for a very long time. And then a key event happens and the race kicks off. Everything suddenly goes. That's very much like Intercede's business in credential management. Back in 2006, FIPS 201 came out that said every federal government employee and contractors to federal government need to have a digital identity managed to these technology standards in business process. And that had a huge impact on our business. We've been very successful in that market. That's why it's 72% of our revenue today. But that's changing. FIPS 201-3 was actually published and ratified end of January this year. Customers have 12 months to start complying with that. That had a very major change in there. It started for the first time to talk about you don't have to just use PKI. It didn't specify only PKI. It called out FIDO as what was called a phishing resistant credential, so a high assurance credential. And the whole model behind FIPS 201-3 is not just you have to use the absolute highest assurance credential you can for everything. It says you need to understand the level of risk and use an appropriate level of security for that level of risk. But unlike some of the more generic legislation, it does call out the characteristics of those authenticators, those security credentials for the different types of risks. And it calls out PKI and it calls out FIDO at the highest standard. That's very big for our market because our customers don't choose a technology unless it's compliant with the standards. They won't go near it. It could be the absolute best technology in the world, and unless it ticks the compliance box, they won't touch it. So that now is starting to say PKI and FIDO is compliant. The second big change in this area is the OMB, Office of Management and Budget publication. So NIST, who published FIPS 201, set the regulations. Office of Management and Budget, these are the people who are part of the Executive Office of the President. They actually push the policies out to say what you must do. So when you see the photo of Biden sat at the desk signing an executive order, if it's a cybersecurity order, these are the people who push it out. And the most recent one here was on zero trust. And that plays with the change to the regulation. So what's zero trust? Today, if you log onto the system, that's generally enough. I log onto the network, and because I'm securely logged onto the network, I can access applications. What they're starting to say is that, no, we can't trust that anymore. Just because somebody's logged onto the network doesn't mean they should have access to the applications. We need to revalidate them at the point of that application access. It's the equivalent in the physical world of just because you've walked in the building doesn't mean you should be able to get into every room in the building. This is bringing that into the cyber world. And that zero trust is very hard to do with PKI only. PKI works really well for some use cases. Windows logon, signing emails is very good for that. It doesn't work so well in the SaaS world, where people are providing the software as services, things like Salesforce, Office 365, because they tend to use more modern protocols. They're provided by the service provider, and you can't PKI enable them. But FIDO does work in those environments because FIDO is kind of baked into the browsers, and it tends to understand that technology. So those we see as the perfect storm of driving demand here. We've got the regulation changing, saying you can use PKI and you still must use PKI, but for the remainder of your population or moving down the supply chain, you can use FIDO. As long as it's issued and managed in a secure way, it's as secure as PKI. And then we've got the OMB publication saying you must move to a zero trust architecture. So those two, I think, are the time where, in the cycling metaphor, the race kicks off, as it did in 2006. That's happening again now. Evidence for that, Klaus mentioned I've been working on supporting our partners in some very large US federal government bids at the moment. Don't worry, Klaus, I won't name them because you're starting to get nervous. I know I'm not allowed. I'd love to. There's probably 3 very large requests for proposal I'm supporting partners on at the moment. Every one of those calls out PKI and FIDO. So it starts to ask about your capabilities around FIPS 201-3 and FIDO. And in the demonstrations we were doing Tuesday and Thursday of this week to some of those bids, they want to see this in action. So I think we're in a very, very strong position in that case. I'll mention NIS2 actually. I saw a question pop up in the chat on it because this is quite interesting. So this is a cybersecurity legislation in the EU. NIS came out a few years ago, and NIS1 in effect. That was very much focused on critical national infrastructure. At the time, it was quite narrow. So it defined critical national infrastructure as what you'd expect in terms of energy companies. And it also wasn't very prescriptive. It was very much you need to understand your risks and mitigate against them, but it didn't state particular technology types. NIS2, which is now being ratified and passed into law as legislation, and over the next 6 to 12 months will start to appear in country regulations, so things people need to comply with, has got a couple of key changes in there. 3 key changes, in fact. The first one is that it broadens the scope. So if you're a food supplier, you are now counted as critical national infrastructure. So from a very small range of companies, it now starts to address probably 50% of the organizations in the EU. The second one is that it pushes security down the supply chain. So again, broadens the scope of it. And the third and important one is it specifically calls out strong authentication. So like the US regulation FIPS 201 that said you have to use strong authentication, NIS2 specifically calls out strong authentication. So is that going to be as big a driver for our business as FIPS 201 was in the US? Time will tell. It depends on the specific rules as it get passed into country regulation. But what we've lacked in Europe to drive our business is regulation stating you must use strong authentication. That's coming, and that's coming with NIS2. So the product with PKI and with FIDO, we talked about that moving down the pyramid strategy, addressing a wider market. The product we've built there, we can sell into our existing types of customer with very strong evidence that they are now asking for that in the RFPs and the tenders that we're working on. We're also starting to see a second drive, which is people much lower down the pyramid in terms of organization size and level of security, are starting to see more and more press. They all understand now that passwords aren't good enough. The CEO of Colonial Pipeline certainly understands that now, but many other organizations do too. There's a lot of press that one-time passwords via SMS. So you get a message on your phone with a one-time code and you type that in. Or also what's known as subject to phishing. So they can be stolen, they can be reused. So there's pressure for people to move up that pyramid as well. Some of those organizations won't move all the way to PKI because it is complex to deploy, but they might move to FIDO because it's easier to deploy. So we believe what we're building into the product, yes, we can address our existing customer base with and types of customers and sell more to them, but we also believe there's an opportunity to start moving into an entirely new type of customer for INTERCEDE. Okay, And that hopefully should neatly lead on to where we're heading with the company.
So if we take Alan's picture of us coming down the pyramid, but organizations having to move up because they have to move away from passwords, then again we end up in that middle part of the pyramid and say, hey, INTERCEDE, how are you going to address that? Well, in effect, there's only three opportunities we can get there. We build it, we partner it, or we buy it. And based on the assessments we've done, we said we're going to build FIDO because it's very close to our heart. It's still cryptographic. We understand that space very, very well. But then if we want to move down that pyramid further, we strongly believe that M&A is the better approach for us. Hence, we appointed head of corporate development. So if we look at what we're trying to achieve and how do we justify this, today we have one product, MyID, with its three versions, as Alan explained. What is our objective here? We want to create a portfolio of software products that fit around alongside MyID, but can also be fully integrated in the same way as that we're currently offering the single pane of glass, the single interface for clients to manage PKI as well as FIDO credentials. Whatever we're going to bolt on from a technology perspective, our core objective is that we need to be capable of slotting that in. So that very much fits on the left-hand side. So target number one is we want to move down that pyramid. We've identified 200 plus companies. As I said in my introduction, we are talking to a number of those in various regions. And our key objective is to come down that pyramid by getting hold of incremental IP. We've had quite a few questions in the last couple of days about, what's the size, what's the shape? Clearly, we can't disclose too much out in the market, but what we can say is we're looking for companies that have got interesting IP, i.e. interesting technology, have got existing revenue, have got existing clients, so we know it's proven out now. So once we've come down that pyramid, we also said, okay, we need to start looking at other adjacent pyramids that we can start taking advantage of. And then you get into the zero trust kind of environment. Alan's example of moving down the corridor, I'm allowed access in office 1, but not in meeting room 3. But I can again get access to the canteen. In the same way, that's the analogy into the various applications. So this continuous authorization and authentication, and that's in the tomorrow section here. Access management, continuous authorizations, continuous authentication, single sign-on. It's an interesting space. Taking more of a medium-term view on it and say, hey, INTERCEDE, today we're very much playing on the enterprise infrastructure side. What can you do on the application layer? And there are interesting areas out there. We're just calling out PKI signing solutions as an example, but indeed there are other application areas we may well be looking into. So we're very clear and stringent on what we're looking at. We're very clear and stringent into where our priorities are, and indeed how we're going to take those forward when we find the right opportunity. So that then leads me quite nicely on to the last two slides here, summary and outlook. Some of this has already been addressed, so I won't spend too much time on it, but clearly we missed some of the revenue. We were 4% down on constant currency, but we've entered the current fiscal year with really good momentum, and we're pursuing some good opportunities. We have a very good pipeline at the moment. The pipeline's developing, not just from the opportunities we already have in the pipeline, but also through adding net new opportunities. All through the period, we've been profitable. Actually, we've been profitable for the last 4 years and debt-free and with cash currently sitting just above 10 million. We had really strong client growth. We want to keep that going. Turnaround we talked about. KPI-wise, we're very, very firm on KPIs, and we've now have a 4-year period of KPIs we can look back at, and whether that's the value of the pipeline, the weighted value of the pipeline, the number of values in the pipeline versus attrition versus churn versus DSO days. Each business function in INTERCEDE has got its own KPIs. We review those on a month-by-month basis, and if something is off track, then we'll make sure we'll get it back on track. Final point here is the recurring revenue growth. That's been really, really strong, 10% year on year. Again, into the current year, we fully expect that to grow even further. And we take our recurring revenue and our repeatable revenue, we pretty much cover our OPEX, as Nitil has already outlined. I talked about previous slide about organic and inorganic. We want to do both, and we really want to come down that pyramid. And then once we've done that, look at adjacent pyramids going forward. So where does it leave us from an outlook perspective? For us, second phase 2, we're very clear on what we want to achieve. Our objectives are very, very clear, and we know how we want to get there. So for each objective, we have a clear strategy or a number of strategies. So we are clear on how we're going to deliver those. Reference the pipeline. Good news is rest of world, which is our business outside of North America, is finally picking up momentum again, which is good. Not just momentum on the existing opportunities we already had in the pipeline, but we're also seeing actively net new opportunities being added. Net new opportunities, interesting enough, traditionally we've seen very little uptake for our solution in the UK, but actually in the last 3 to 6 months, we've seen more opportunities than we've seen in the last 6 years. And that's interesting in itself. We are seeing different primes, different system integrators approaching us who specifically want to bid MyID in a number of opportunities that are present currently in the UK. They're all government related, but again, it's a market we see, we understand well, we have the credibility, and it's probably one of the key reasons why they're coming towards us. North America, talked about much lower impact from COVID, some delay on the larger programs because again, there's been a lot of home working, but as a country and as a business for us, North America has contracted pretty normal. Innovation, R&D, we talked about, we're pretty close to investing £3 million year on year into the product. And if we look at the product today versus the product 3-4 years ago, I strongly believe we have the best product in town. It's also, I think, a good indicator as to what's happening in the market. 3-4 years ago, we actively had to pursue the larger opportunities in as far as trying to get a foot in the door. Today, because we've had a number of significant wins over the last couple of years, we've professionalized as an organization. We've heavily invested in the product. The product looks good. The product is slick. It's highly performing. It's highly scalable. It's highly secure, as Alan outlined. We now see the primes coming towards us. So when we're bidding for the large tenders, we typically have multiple primes bidding MyID, which clearly from a client perspective is a really good sign when they see the same product being positioned by different system integrators or different primes. So whilst we've been trying to build momentum within INTERCEDE, which is clearly key, more importantly, as Alan outlined, we now also see momentum into the market. Momentum into the market because the standards and the directives are there, and that basically drives the uptake of our product going forward in our existing client base, but also in net new opportunities. And the fact that tenders since January are now being issued to mandate PKI, FIDO, etc., for us, it's a real good position because we're the leading product in that space. Yes, we were early last year in March because we were ahead of the standard being released. On the other hand, it's given us a year of experience where we've demoed, we've demonstrated, we've had proof of concepts already. So when somebody wants to see our capability in this space, we're ready today. Leads me to the final point. We remain confident in our ability to deliver double-digit growth, double-digit in terms of organic growth, but also in terms of inorganic growth. And as and when we have more information that we can release to the market, then we definitely won't be shy in coming forward. And that concludes the presentation. There's a few appendices here, but unless there are specific questions, we won't dive into that. Now, I think Jake.
That's great, and Nitil and Alan as well. Thank you very much indeed for your presentation this afternoon. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab that's situated on the right-hand corner of your screen. But just while the team take a few moments to review those questions submitted already, I would like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Class, Nitil, Alan, as you can see, we have received a number of questions throughout today's presentation, and thank you to all the investors for submitting their questions. If I could please just hand back to you to run through that Q&A tab, and where it's appropriate to do so, if you could please just read out the questions and give your response, that would be great. Thank you.
Okay, well, let me take the lead on this. Then at least I know where the questions are going, and then I'm hopeful that both Nitil and Ellen have got the right kind of answers. So there's a question from Alistair, question directed at Nitil. First, congratulations. How does your accounting work for deals sold through partners? Do you book the whole fee as revenue and then account for the commission under admin expense or something else?
Yes, I can answer that. Can you hear me? Thank you very much. I'm glad to be on board. We abide by IFRS 15, recognition of revenue. So it depends on what the revenue stream is. If it's a perpetual license, it's on the day we pass the license obligations and responsibilities to the client. And it doesn't matter if it's the partner or the client, it has to meet the IFRS 15 obligation. And then if it's a supported maintenance, if it's a 12-month contract, we'll recognize it on a monthly revenue stream, even though it's paid on an annual basis. Regarding commission, that is on an invoice-based system where we invoice to the client or the partner, and as the invoice is raised, then the commission is paid via payroll in a month in arrears.
Okay, thank you for that, Nitil. We have another question from Alistair. How big do you think is the NIS2 opportunity? Do you need to do anything different to exploit it? Most obviously, do you need an office in the EU? Ellen, thoughts about this one?
Yep. So currently, NIS2 is legislation. EU has passed it as cybersecurity legislation. And then within 12 months, it will start to appear in specific countries as regulation. That's when we'll get more knowledge about the size of it and the scope of it and where we can fit. In terms of, do we need an office in the EU to exploit it? I don't think we do. We've got a strong partnership network in Europe already. They speak the right languages, they're in the right territories, they've got local presence. What we are doing is looking at generating some marketing around this and some thought leadership around this so we can start to look at NIS2. So I can't answer the how big question, but I can say it's significant because there hasn't been legislation like FIPS 201 in Europe, and this is the closest I've seen in 20 years of working in this space. So I expect it to be significant. We'll know more when it turns into regulation, and it's absolutely something I think we can explore through our growing partner network.
Thank you, Alistair. We have the next question from Simon. How should we look at the operational gearing of the business going forward with costs covered by recurring revenue? Nitil, one for you.
Thanks. Hi, Simon. How do you look at operational gearing? Well, it's good news that we've got an element. It's not all of it is going to be covered in FY23 by S&M and PS. We're going to get about 90-95%. Well, the way you should look at it is that any license deals we do going forward should be highly, highly accretive to the bottom line.
Okay, thank you. Another question from Alistair. How are sales for MyID Professional progressing? How many customers? Some rough feel for revenues. Well, let me take this one. We don't split out revenue for the individual product lines. We have one product group. What I can say, Alistair, is we see good uptake on MyID Professional. It's between 5 and 10% of our installed base. Revenue-wise, it's less because these deals are smaller. You're into, at the very low end, probably $8,000 to $10,000, and then depending on how many licenses on a subscription basis they're buying. But let me be clear, it is subscription-based revenue. So we've just installed one here in the UK with a UK-based software company. Within 3 days, it's installed, it's up and running, they're issuing certificates. We have other instances in the US where clients have actually installed it themselves. So we know this product fits in the market. There's actually been a secondary benefit by introducing MyID Professional into the market. This was typically a market we wouldn't even be engaged in. We wouldn't be involved in any of those opportunities floating around in the 500 to 2,000 licenses. But because we are positioning in that market, we are being engaged. We are then in a position to qualify the opportunity. If the client then comes out with, hey, yeah, but I don't want a Microsoft CA, I want a DigiCert CA, we say, yeah, absolutely, we can do that. But in that case, you need to move on to MyID Enterprise. So actually, it's added the additional benefit of giving us access to net new opportunities, which in value terms has actually been more valuable than the absolute revenue we'll see from the product coming through. So hopefully that's giving you an answer, Alistair. We have a question from Sat. Can MyID be used for addressing, I think what you're trying to say, can MyID be used for addressing the open banking market? Alan?
Yep. So this is something we looked at. So it's looking at strong customer authentication, and initially you look at it and think, well, MyID does authentication, isn't it a perfect fit? The reality is it's a very different market, different technologies, different players, different go-to-market, different models of consuming it. And we viewed that we're better off focusing on our strengths. We think there's some significant regulatory drivers that means the pickup for our technology and our existing types of customers is there. Fundamentally, we're employee ID, and SCA, the open banking, is very much B2B2C model. So it's quite different. So we decided it's not something we want to focus on at this moment. We don't want to get distracted. We want to focus on where we see the best chance of growth is and revenue. Having said that, some of the M&A activity may well change that position, but I can't really talk any further than that. So the answer is not yet.
Okay, thank you. Another question from Alistair. You've set out quite a bullish outlook, but I find that hard to reconcile with the FinCap downgrades, which rebase future years to FY22. What should investors reconcile the apparent tension? Nitil, you got a...
Thanks, Alice. Class. I think if you look at the FinCap, their target price is 125, and we're currently at 49. So they're quite bullish on the way we're going, or what their expectations are. I think what they are saying, they looked at the dip in the revenues to 9.9, and then moving obviously to 10.9, and then 12 into FY23 and FY24. What they are looking at is there's an element of investment that we have to do, and we're expensing that into the income statement, and you can see that from their numbers. What we're saying here is that we see an uptick in our marketplace, and we see growth in our market. Now, as Klaas said, our clients are not adapting the old methodology of taking all the licenses in one go. They're doing it in an incremental way, because I think they're just moving their existing supplier out while we come in as a new supplier. We see that continuing, hence why we're being slightly cautious in what we're telling FinCap on how we see revenue recognition compared to winning a contract. I hope that answers your question.
Thank you. We've got a question from Douglas. What sort of size do you think your acquisitions may be, and how would they be financed if not just cash? I'm afraid, Douglas, we're not going to announce in the public domain what the size of the acquisitions we're looking at. But what I can tell you is we got a rigorous process of what we're looking into, and there are a number of financial metrics there. But more importantly, it needs to be technology that we think has got legs going forward, must be proven in the market, and something that we can integrate to. Financing, I think Nitil already talked a little bit about this. We do have cash on the balance sheet. We do have access to a revolving facility with Clydesdale Bank. And if we have to raise more capital in the market, then clearly that's always an option. The current share price isn't great for that, but we're confident over time share price will recover, and that will probably give us more options going forward. So I just need to scroll down. Simon, usually others follow what the US government does, especially in the defense sector. Why has this not been the case with MyID? Well, Alan.
I think it is the case with MyID. So there's 2 points here. One is that there are some defence customers in countries that we absolutely cannot name, but they are there and they are following those US government standards. The other piece is that those defence customers tend to move incredibly slowly. They move really, really slowly. But where we are seeing tenders for systems and replacement systems and renewals of systems coming up, we are winning some of those, and they are looking at following those NIST and FIPS 201 standards.
Okay, thank you. Got a question from Eddie. With a strong recurring revenue base, why shouldn't organic growth be significantly higher than 10%? Question number one. It feels like stabilizing the sales function should be the priority ahead of acquisitions. Nitil, you want to take the first part?
Well, yes. Why is our organic growth not stronger than 10%? I think I've kind of already mentioned this, that although we believe we're going to hopefully win some good contracts going forward into FY23 and FY24, we're recognizing the way that our clients are operating, and therefore we're just being slightly cautious on when they're going to enact the full value of that contract, whether it's going to be in buckets of 1, 2, 3, 4, 5, rather than the full allocation. Hence why we don't believe at the moment that anything above 10% to 15% is going to be probably deliverable, just reflecting what our clients are doing.
Okay, thank you. So the second part of the question, it feels like stabilizing the sales function should be the priority ahead of acquisitions. I'm not quite sure what the background to the question is, because it could kind of imply there's a problem with the sales function, and I don't think there is a problem with the sales function. If anything, I think we got a really good sales function at the moment. As indicated, our sales are very much driven through the channel. It's a good way for us to broaden our footprint into the market without having to invest in expensive sales ourselves, because for a small company with 10 people, you cannot run a global sales approach. But as we've proven with our partners, we can get reach into the market. Andy Darley from ThinkCap in his company note has also clearly indicated that, as a business, we're capable of running multiple deals through the same partner. Our pipeline also supports that. So the investment, I don't think, should be in the direct sales function. The investment has got to be in creating our reach into the market, and indeed extending our go-to-market through technology and and a few technology partners. Simon had pretty much the same question, so hopefully that's dealt with that. Simon suggesting, wouldn't we be better off hiring a few super salesmen? The challenge with hiring the super salesmen is A, they're very expensive, and B, one salesperson can only run this many deals, whereas what we're doing through the channel is we're seeing multiple opportunities coming through the same channels. So it's a far more efficient way of getting more reach. Another question from Simon: why haven't you made small investments, funding grants into university cyber departments in order to access what might become available, etc.? Alan?
So we have tried that in the past. In the past, we have been involved with some universities and cyber departments and looked at what they do. The reality was we weren't really getting return on investment, and it was very long cycle. As we expand what we do, potentially down the M&A, that might become more relevant. So we have tried it in the past. We stopped it because it wasn't returning income in a short enough time frame, but we might review that again.
And what we are finding, if you can, on the other flip side, is that we are accessing universities for recruitment, for young developers, for succession planning into the group. And that's been quite successful for the last year.
I know we're slightly over time, but there's a few questions left. So let's take the last few questions and then we'll wrap up. A question from Peter: who are your main competitors in different market segments? Alan, one for you.
Yeah, it very much depends on the country and the end customer. So in the US, at the government scale, we have HID, we have XTech as probably the primary competitors. If you move lower down the scale to where MyID Professional competes, then it tends to be, am I going to use PKI or am I going to use a one-time password solution? So it's more of a competition on technology than vendor. In Europe, it tends to be people like Nexus and VersaSec, but it really depends on the market space and the combination of the market space and the geography. It's not a simple answer.
Okay, final question from Simon: is geopolitical volatility a positive for you? I actually think it is. There is a lot of focus on cyber at the moment. Cyber budgets are not discretionary anymore. Cyber security typically now hits the boardroom, which is good for us. And what we're seeing in the US, what we're seeing in continental Europe, what we're seeing in the UK is increased interest in cybersecurity solutions, and clearly that's the market we play in. And I don't think there is a coincidence that the increase in opportunities we're seeing in the UK is not directly related what's going on in the wider environment. So yes, I do think, Simon, it is a positive for us. So I think that concludes the Q&A. Jake, back to you.
Nitil, Alan, thank you very much indeed for being so generous with your time there and addressing all of the questions that came in from investors this afternoon. And of course, if there are any further questions submitted today, we'll make these available to you immediately after the presentation has ended for your review. And ladies and gentlemen, we'll publish those responses where it's appropriate to do so on the Investor Meet Company platform, and you'll be notified by email when they're ready for your review. Class, perhaps for redirecting those on the call to provide you with their feedback, which I know is particularly important to yourself and the company. If I could just ask you for a few closing comments to wrap up with, that would be great.
Thank you, Jake. So we're really looking forward to continuing our progress into the current fiscal year. Our offering remains very relevant, as witnessed by our current sales, but also by our ongoing pipeline development. Alan has explained how we're now positioning MyID and how we aim to take advantage of a much enlarged target account market by adding authentication as well as FIDO. Clearly, I have to add that we have a highly committed and loyal team of colleagues who day after day delivered what I believe is the best code in our part of our industry. We aim to deliver continued revenue growth. Thank you again for attending. We look forward to updating you again in October. And please do not forget to provide your feedback. Your feedback is really important because we want to continue to improve on what we present on a half-yearly basis to you. So please use your feedback. As long as it's constructive, we happily take it on board. So thank you for attending, and we look forward to seeing you again.
Class, that's great. Nitil and Alan as well, thank you very much indeed for taking the time to update investors today.
Thank you.
Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of INTERCEDE Group PLC, we would like to thank you for attending today's presentation. That now concludes today's session, so good afternoon to you all.
Thank you. Good afternoon.